Good morning. I'm Dr. Wilson Pearl, Associate Professor, Department of Corporate Secretaryship of KCS Kasnada College of Arts and Science. Now we are going to see the next set of ratios, that is solvency ratio. Another name for solvency ratio is financial ratio. Another name for financial ratio is balance sheet ratio. All these three means one and the same. Okay, the solvency ratio is of two types, short term and long term. Okay, now under the short term, there are three ratios are there. Under the long term, there are four ratios are there. We'll see the short term first. Under the short term, first current ratio. For current ratio, the ratio is the formula will be current asset by current liability. Okay, the first ratio for your short term solvency is current ratio. Current ratio will be current asset by current liability. For that, we have to know what is the list of current assets. The list of current assets they gave you here. Debtors, another word for that is book debts. Bills receivable, stock, another name for that is inventory. Cash in hand, cash at bank, and outstanding income, prepaid expenses, short-term investments. These are your list of current assets. The same way, the list of current liabilities also is given there. Creditors, bills payable, bank overdraft, short-term loan, outstanding expenses, and income received in advance. So these are your list of current asset and current liability. Now we'll go to the next slide. Now next we'll see the quick ratio. The another name for quick ratio is liquid ratio. Another name for liquid ratio is acid test ratio. Another name for acid test ratio is liquidity ratio. So which means all the four means one and the same. Okay, liquid ratio, quick ratio, acid test ratio, liquidity ratio. All the four means one and the same. The formula for that will be liquid asset by liquid liability. The liquid asset is already, the formula for liquid asset is given here. Current asset minus stock minus prepaid expenses. Then liquid liability or current liability, anything you can be used. You can use both separately. Okay, so if you use liquid liability, we have a different answer. If you use current liability, we'll get a different answer. Okay, now the next ratio will be your current liquid ratio. The formula for liquid ratio will be current liability minus bank overdraft. Okay, next cash position ratio. The another name for cash position ratio is absolute liquidity ratio or super quick ratio. The formula for that, cash and bank balances plus marketable security. Another name for marketable security is short term investments divided by current liability. Okay, that will be my absolute liquidity ratio. The next ratio will be working capital ratio. Now working capital, the next, not a ratio, it is a working, there's only three. Okay, current ratio, liquid ratio, and cash position ratio. Now the working capital is general formula is given here. Working capital is equal to current asset minus current liability. So remember this, current asset minus current liability is nothing but your working capital. So hereafter you will be using very frequently this formula first. Working capital is equal to current asset minus current liability. Now we'll see sum number 13. Calculate the current assets of the company from the following information. Stock turnover ratio is 5 times. Stock at the end of the year is 5,000 rupees, more than the opening stock. Then sales is 2 lakh. The gross profit is 20%. Current liability is 60,000. Then credit quick ratio is 0.75. So the problem here, the sum asks you to find out what is the current asset. What are the list of current assets? Current assets only in total. Okay, we'll see the next slide now. Now we'll start with the stock turn ratio. Cost of goods sold by average stock is equal to 5 times. Therefore, to find cost of goods sold is sales minus GP. Therefore, 2 lakh divided by average stock is equal to 5 times. Okay. The 2 lakh is nothing but sales and GP is nothing but 20% of 2 lakh. Okay. Therefore, 2 lakh minus 20% of 2 lakh is 40,000. Therefore, 1,60,000 divided by X is equal to 5 times. Therefore, X will be 1,60,000 divided by 5. Therefore, X is equal to 32,000. So that will be my average stock. Now, the formula for average stock, opening stock plus closing stock divided by 2. That is the 32,000. Now to find the closing stock, I know the shortest way. The second method, which is nothing but the average stock plus half of excess value. So 32,000 plus half of 5,000. The excess value is 5,000. Okay, so half of 5,000 is 2,500. Therefore, my closing stock will be 34,500. What will be the opening stock then? 5,000 less than that, which will be 29,500 or 29,500. Okay, next, quick ratio. What is the quick ratio? Is given here as 0.75. Therefore, the formula for quick ratio will be quick asset by current liability, which is equal to 0.75. Therefore, quick asset I don't know. I know my current liability, which is given in the sum as 60,000. Therefore, x divided by 60,000 is equal to 0.75. What will be the value of x now? X is equal to 60,000 into 0.75 will give me 45,000. So that will be called as x, which is nothing but quick asset. Now, once I know the quick asset, I can apply the formula for quick asset, that is quick asset is equal to current asset minus stock minus prepaid expenses. The prepaid expenses here is optional. It may be there or may not be there. Only if the problem says the prepaid expense is there, then we use that prepaid expenses. If nothing is said in the problem, the prepaid expense is ignored. So for the current quick asset, the formula will be restricted to current asset minus stock alone, not the prepaid expenses. Okay, in general, when you write the formula, you have to write prepaid expenses. Okay, and if it is there given the sum, you will use it. If not, the prepaid expense will always be 0. Then now quick asset I know it is 45,000 equal to x minus my closing stock is 34,500. Therefore, when this 45,000 goes that side and x goes this side, which will be x is equal to 79,500. That will be my current asset. Okay, the problem asks us to find only current asset. Therefore, the answer is 79,500. The next sum. Now sum number 14. From the following information given below, calculate the current liability and inventory. Current liability and inventory means inventory is nothing but my closing stock. Okay, now to start with the current ratio, the current ratio is given as 2.5. My acid test ratio is given as nothing but liquid ratio is 1.7. The current asset is given as 250. Now the problem asks us to find the current liability and inventory. Okay, now start with current ratio is equal to current asset by current liability, which is equal to 2.5. Therefore, my current asset is given in the sum as 2,50,000 divided by x is equal to 2.5. Now, x will be what? 2,50,000 divided by 2.5. So, if it is 2,50,000 divided by 2.5, my x will be 1 lakh. That is my current liability. Okay, the first answer is ready. Now, I want to find the inventory, that is the closing stock. So, for that I need quick ratio. Okay, I am using the quick ratio now. Quick ratio, acid test ratio, all of the liquid ratio, everything is nothing but the same. Now, quick asset divided by current liability is equal to 1.7. That is what is given in the sum. Therefore, quick asset I don't know. Whereas the current liability now only I found out is 1 lakh. Therefore, x divided by 1 lakh is equal to 1.7. Therefore, x is equal to 1.7 into 1 lakh will be 1,70,000. That is my quick asset. Okay, now I use a quick asset formula. Quick asset is equal to current asset minus stock minus prepaid expenses. I told you prepaid expense is always 0. Now, therefore, 1,70,000 is equal to 2,50,000 minus x. Okay, therefore, x is equal to 2,50,000 minus 1,70,000. That is 80,000. That will be my stock. So that is the answer. Okay, now we'll go to the next sum. From the following details, find out current asset, current liability, liquid asset, and stock. Okay. Now, the current ratio is given as 2.5. The liquid ratio is given as 1.5. Working capital is nothing but 90,000. Okay. Now, since it is working capital is given first, we'll start with the working capital. Sales is not given here, no. So when sales is not given, whatever given here, we'll start from that first. Therefore, we are given working capital here. I know, I told you the formula for working capital in the first case itself. Working capital is nothing but current asset minus current liability. Okay, now we'll see the next answer in the next slide. Now, working capital is equal to current asset minus current liability. Now, let us take the assumption that current liability will be 1. Okay, now we're going to take the assumption that current liability be 1. Therefore, current ratio is equal to current asset by current liability, which is equal to 2.5. Then, therefore, current asset divided by current liability is equal to 2.5. That is 2.5 divided by 1 is equal to 2.5. Okay. Now next, therefore working capital is 90,000, which is equal to current asset minus current liability. Here we found on assumption that current liability, if current liability is 1, now current asset will be 2.5. Okay. Now the 2.5 minus my current liability 1 will give me 1.5. Okay, I'll repeat this again. 2.5 is my current asset and 1 will, as per the assumption, the 1 will be my current liability. When 2.5 minus 1 will give me 1.5. That is nothing but my working capital. Okay, because I am minusing 2.5 from the 1. 2.5 is current asset, 1 is current liability. Therefore, 1.5 will be my working capital. And for that 1.5, the value which is given in the sum is 90,000. That is the working capital value. Okay, now we will go to cross multiply. If 1.5 is 90,000, what will be for 2.5? Therefore, 2.5 into 90,000 divided by 1.5. The answer will be 1,50,000. That is my current asset. Once I know the current asset, I will use substitute in the working capital formula. Current asset is 1,50,000 minus current liability is X equal to 90,000. So what will be X now? 1,50,000 minus 90,000 will give me 60,000. That will be my current liability. Okay, now we'll go to the next slide. Now, using the quick ratio, quick asset I don't know, but current liability now only I found out, which is 60,000. Therefore, X divided by 60,000 is 1.5. Therefore, X will be 90,000. That is my quick asset. Okay, once I know the quick asset, I can find the stock. So quick asset is equal to current asset minus stock minus prepaid expenses. So quick asset is 90,000 equal to current asset is 1,50,000. I don't know what is the stock. Prepaid expense I told you earlier, unless and otherwise it is given in the sum, it will be always 0. So 90,000 is equal to 1,50,000 minus X minus 0. Therefore, X is equal to 60,000. That is my stock. So that is the final answer. Okay, and 2 more sums are given here for your practice. You can practice that later on. Now I'll go to the next one.